Okay, live. Let me check my stream. Should be alive. Yes. Yeah. Okay. Right. Um. Oh. Yeah. So welcome to the stream. Yes, my student is back today. Yay. So yeah, we'll just be going through just a series of theory questions. Right. It's more beginner friendly in my opinion. And yeah, for those of you who are catching this on the VOD, let me just introduce my channel real quick. Uh, I just do mainly educational streams, right? I teach accounting mainly at the beginner level, right? And yeah, the objective is just to get people, to learn a bit of foundation in accounting, especially for those who are, working doing accounts, but they are not, uh, you know, graduates from business school or accounting school, right? So, yes, to just give a little bit of insight, and also for those who are studying accounting, right? It's pretty dry, and the goal is just to, explain it in a way that you can absorb easily, right? So I try to keep it relatable here, but of course, I'll say this as many times as possible. If you don't get an explanation here, right, like something that doesn't click with you, it's perfectly fine, right? Just need to, ask either me or your teacher, if you have one, for a different explanation, right? Something that is relatable to you. And that is honestly how I learned my own, accounting. Accounting journey was just trying to make something this dry, learning accounting, trying to make it a little more fun for myself, right? So, and yeah, without further ado, we can actually start the lesson proper. Let me bring up the. Is this? Yep, okay. So, okay, let me scroll up and also let me bring the YouTube chat up as well. So I can look at I can see the questions if they appear, right? Um, Let me try to get it more centered. Is it centered for you guys? I hope it's not blocking too much. Ah, should be fine, I think. Right. Okay, I'll bring my student over as well. Hello. Yes, we're live. Are you ready?
Hello. Yep.
Okay, let me stream
Okay.
this to you first. Where is the... Oh my, what happened? Oh, okay. Can you see it? Is it a bit dark?
Yep. Nope, it's alright.
Okay. All right. So, I mean, you could read the question. Have you done it in your free time?
I have not.
Okay, that's fine.
I've been just fussing over my course.
It's okay. That's perfect then. You get to
Yeah.
practice a bit. Right.
Justin
So,
operates a delivery business. Okay.
mm,
Crash. So place December 2019.
mhm,
So it's a service business. Um Purchase of a new motor vehicle. Uh an asset.
mhm,
$20,650, which include an annual road tax of $150.
mm,
Okay. Receipt of 1455 cash from Xavier, a credit customer,
mm,
and settlement of an invoice after deducting 3% cash discounts. Okay.
mhm,
Uh, 1455 taking cash, credit customer. Cash is plus uh plus asset
mhm.
and
What
credit
asset is it?
grade receive current asset
Okay. And then
and then credit trade receivables.
for you're looking at transaction 2, is it?
Yeah.
Okay, so you debit cash. How much?
14. Actually, no. Yeah, no. 14.55.
Okay. Okay. And then
And then you credit trade receivables.
how
I
much?
believe. Yeah. Uh. Uh. What is 103% of 14.55? 14.55 times 1.3, 1891.5.
Hmm. Okay. Want to ask you a question, right?
Mm-hmm.
This four, 1455, what percentage is it?
It is 97% of
97%.
what he owes.
Okay. Then how do you get your 100% then?
Plus 3%.
Mm-hmm. So here's the question, right?
Oh,
Do you
okay,
divide
my
it by
calculations.
97% or do you
Right,
multiply it by 103%?
right. I see where I go wrong now.
Yeah, so you should be dividing it by 97% here. And the number is you good? Eh? Oh no. Uh oh, he's still in the call. You okay? Oh dear. Okay. Uh right, he might have some technical difficulties right now. So I shall, do a bit of clarification, right? So what does cash discount mean? So for cash discount, uh, this means that at the start, the customer owes a certain amount. For example, in this case, 1,500, right? And this 3% is actually, if the customer pays early, there is a discount given to reward them for paying early, right? And in finance, you probably have heard of cash is king, right?
I
So
apologize.
sorry?
I apologize. I crashed.
Ah, yes. Okay, you're back. Right. So I was explaining the cash discount part. So,
Right.
yeah. So cash discount is essentially a reward for customers to pay earlier because you want the liquid cash to continue running your business, right? Okay. Then you saw that the amount in debit and the amount in credit is different, right? So
Yeah.
what do you write there?
Uh, you. Uh. Uh.
If you want, you could use the
I.
answer as well. I have my own answer,
Mm, mm,
but I think because you're taking the exam, right? So
right.
yeah,
I'm trying to work this. I guess. Wait. No. That. You debit cash discount
is that the
and
answer,
credit.
or is it the
It is for. Is for the double entry, right?
yeah?
Uh, I I believe is debit, cash, discount, and credit. What was it? Uh, credit. Sales revenue.
Not quite. Okay, so if you look at the screen right now, right,
Uh.
you see that your account credited amount is 1,500, correct?
Mm-hmm.
And your cash is only 1,455,
Right.
right? So it's not balanced, meaning something is missing, right? Your 3%.
Mm.
So what account do you park this 3% under?
You park it on the debits cash discount.
Cash discount, okay. Do you want to check the answer to see if that is the right account to park it under?
Sure, give me a minute.
For me, I would say like discount given. It's an expense. The reason why it's an expense is because you are incurring this, right?
We are at question 6. It
Yes.
will be called discount allowed.
Discount allowed. Okay. Yeah, so I was saying just now I said discount given, but I mean discount allowed will also work. So since you're taking the exam, you should follow what they want.
Okay.
Yeah, so if I'm not wrong, it's
And
545.
Is it? Let's see.
Oh
No,
wait,
it
sorry,
is
it's
actually
145. My
45.
bad, it's 145.
No,
No, it's just 45.
It's just 45. Yeah,
I can't math.
it's all right.
How to math?
I'm having a migraine myself.
Yeah. So are you okay?
Yeah, I had NRX earlier.
Okay. We'll try to keep this short then.
All right.
So yeah, at the end, right, you just need to make sure that the sum is the same.
Okay.
Yeah. So, okay. Then we move on to actually the first one. Did you say already? Your answer.
I did not say. No.
Oh, okay.
Uh,
So what account do you debit first?
you debit an asset.
Asset? Which asset?
Uh,
I mean, you can use the name in
vehicle.
the question.
I guess yeah. Debit motor vehicle.
Okay. And what is this? Is this a current or non-current asset?
This is a current asset.
Is it a current asset?
It's.
Do you plan to only use it for less than a year?
Oh, okay. So non-current asset, yeah.
Yes. So usually this sort of assets, unless you're using it for sale, right, will be considered a non-current.
Okay.
All right. Then how much do you put in it?
2650.
2650. Do you include the annual road tax?
Annual road tax. Oh yeah, and then you debit tax payable as well, no?
Okay. Tax payable, not sure if it is. You can check your answer. I was thinking of just road tax expense, but tax payable will be fine.
Oh yeah, no, motor vehicle expense.
Motor vehicle expense, yeah.
Yeah.
So tax payable has a different meaning. Tax payable is to do with your usually for GST actually.
Oh, okay.
So motor vehicle expense, right? So how much is in each?
2650 plus 150.
Is the 150 included in the 2650 or separated?
It is separated, so you add 150.
Is the 150 already part of the 2650 in the question?
No, it's two separate things.
They paid by check, 2650, which included.
Yeah. Oh right.
No. Come on. It's okay.
Okay.
these are the sort of traps they'll lay in the question. So it's good that you
Uh,
get tripped by them now rather than in their actual
okay.
exam. So it's okay.
Right.
It's perfectly fine. Oh, cash at bank. There's a few way to write this. But yeah.
Right.
Okay. So now, I mean, we just move on.
Yeah.
Okay, so discuss discuss this person's business cash position and suggest ways in which their cash position could be improved. So what do you understand by the two words cash position?
Mm, I would assume it is how much cash they have on hand.
Okay. Uh, to be more specific, right? They are looking at the amount of cash inflow, meaning the amount of cash they receive in a month, versus
Mm,
the amount of cash outflow for the month, right?
mm, okay.
So in this case, the large purchase, right, would be a
Mm-hmm.
one-time cash outflow.
Right.
So for that month, your cash outflow is a lot higher than the cash inflow, right?
Mm-hmm.
Hmm. They didn't really say if there are any you know, other cash flows. So you assume that these are the only two, right?
Right.
And well, what do you understand by this? Right? Which is higher, the amount they got or the amount they gave out?
The amount he gave out.
Okay, so then that is what you put for the first part of this question, right? Their business
Mm,
cash position. Right now they are well in the negatives, right?
okay.
So their
So
total cash did decrease for the month. So if I'm not wrong,
okay.
that is the first part, the answer to the first part. The second part, well, what can you think of to so that they can get more cash, right? More inflow for the month.
Hmm. Mm, let's see. Uh, they could offer better incentive for cash payments.
Okay. So your number one could be more incentive for credit payments, right?
They want cash payment, no? They're looking for cash payment.
Yeah, but more incentive for
Uh,
cash payment means when you make a
uh,
cash sale, you give them discounts, or when
uh,
people who owe you money pay you, you give them more discount. Which are you referring to here?
uh, the first one.
The first one. So when people
Yes.
pay in cash, you give them more discount.
Yeah.
Okay, sure, we can write that down. So, more discounts for payment in cash, right?
All right.
Okay. What other ones that you might want to look into? So we're coming up with a few options for you that you can write down in
Mm-hmm.
the exam.
Uh, uh, I'm not sure actually. Other than this, nothing else comes to mind.
Okay, I mean you remember the 3% that they gave, right?
Yeah.
So what about more percentage given when they
Oh,
repay you, right? That's one more, right?
okay.
Increase discounts. For uh early payment of credits, like early credit payments. Yeah, we can just go with that for now, right? There is one more.
Mm,
Okay, so this one is a bit of real world things. So each
right.
company they have something called a credit term, meaning there is a sort of like soft deadline for collection of uh mm, collection of these sort of credit payments. Usually it's
Right.
1 month, right? But of course, companies can specify however much duration there is. And
Right.
biggest companies, like they actually have a whole team of people who chase who chase their customers for these sort of payments. So there is a few things you can do, right? So, for example, the team, you can train them to become more stern. That is an answer, by the way, for LCCI, being more strict
Okay.
with their customers, right?
Okay.
There's also decreasing the credit term, meaning you shorten it, right? So those are two options. Which one do you want to go for?
Let's go shortening the credit
Shorten.
term.
Okay. Shorten credit term. Okay, so are you satisfied with 3 of the answers?
Yeah.
Okay. Alright, so this one is part B. Alright, we can go to part C. So distinguish between bookkeeping and accounting. So what do you understand by bookkeeping?
Bookkeeping is simply recording down
Mm-hmm.
all transactions.
Okay. Bookkeeping versus accounting, right? So
Right.
recording. Well, then what about accounting?
Accounting is to balance out all the transactions, finding finding out where your money is going.
Okay, so more analysis, right?
Yeah.
So it's recording and analysis. So bookkeeping is a subset of accounting. So in order to learn accounting, you need to know bookkeeping first, because bookkeeping are the rules that govern, all the accounting procedures that we do, right?
Right.
So yes, accounting, you also do recording, yes, but you add in the element of analysis, right? Okay. Not sure if this is enough for the answer. You can check your answer to see.
Should I read out the model answer?
Yeah, sure.
Accounting refers to the process of recording, summarizing, analyzing, interpreting, and communicating of financial information of a business. Bookkeeping is concerned only with the recording function of the accounting process.
Okay. So communicating is the other one. Okay. So bookkeeping, right, is your debit credit, right?
Right.
Same with the recording part of it for
Right.
accounting as well. Analysis is all your ratios, all your again, analysis, right? So things like, cash position, certain positions, right? And communicating is your financial statements. So all your balance sheet, income statement, changes of equity, all that stuff, right? So far, do you have any questions regarding this?
It's quite straightforward. It's simply defining the terms difference between each other. It's fine. I
Okay.
have no questions.
Right. Then, anything else before this that you have questions about?
No, I'm good.
Okay. Right, then we move on to the last part. What is going concern theory? It's a bit of revision for what I've learned previously.
Have you came across going concern?
Yes. Yes, we did. I'm pretty sure we did.
Well, I can't remember at this moment in time.
You can give it a shot.
Okay.
Yes.
Going concern, I would guess it is frick. Business long time payments crap. I'm trying to piece together things.
Yeah, no worries. Take your time here. It's important that you record this yourself instead of me telling you.
Let's see. the business receives payments over a period of time, resulting in the payment having the leeway to not be made. I guess
Mm.
if I'm not wrong, that is it. It's just the business hopes to receive a certain amount of payment over a period of time, but there's also a chance that they won't be able to receive the full payment due to various reasons.
No.
No, okay,
Yeah,
fair enough.
that is off. Okay,
Okay.
so let's just oh dear, what is there? Eh? Oh my. Okay, wait, hold on. Let me okay. Right. Accidentally pressed something that I shouldn't have. Sorry. Right. So okay. Going concern, essentially it just means you assume, it's an assumption, okay, that the business can continue forever. Does this ring a bell?
Okay.
Do you recall that we went through something like this? I mean, granted, it's a bit that's a bit long ago.
Yeah. I do remember. I do remember it had something to do with like the long term benefits of a business, like something to do with business and this duration. I
Not
couldn't
really.
quite put
It
a
has
finger on.
something to do with how we do accounting for certain businesses. So if you look at the stream again, right?
Right.
This summarizes it basically. So going concern, you assume that business will continue for forever essentially, right?
Right.
And based on this assumption, we can run accounting on the accrual basis. You think of it as a system, right?
Right.
So these are two different systems: accrual basis and cash basis. Accrual basis
Okay.
essentially means you record things as they are incurred, right? You record revenue when you earn them, not when you receive the money. You record expenses when you incur them, when you get benefits from it, right? And you
Right.
pay the amount for it. Either before or after the use, but you recognize it essentially when you use it, right? When it's
Right.
incurred. Cash basis is dealing purely with cash, right? When you pay it, when you receive it. So,
Right.
for example, right, a one-time payment for a long-term expense, right? For example, you pay for a full year of um let's use something else. Your Wi-Fi, right? Your home
Right.
broadband. You pay 1 year for it. In cash basis, you record it at the date of payment, right? The full amount. And that's that. But for accrual basis, you actually prorate it throughout the months.
Right.
So and anytime you stop, right, it will just be up to that point. But cash basis is a bit different.
Okay.
So it actually affects how we do accounting under certain situations. Normally we'll use accrual basis, right? Because we assume that the business can continue essentially
Right.
forever.
Right.
But
Nothing will
if we
go wrong
suspect,
and stuff.
yes,
Right.
sorry.
No, it's fine. No, I'm mumbling to myself the process.
Oh, okay.
Carry on.
Yeah. So and yeah, for cash basis, it's when going concern is not applicable, meaning that this company is already going down. So you will use cash basis.
Okay. So going concern is just accrual. It's just accrual accounting accrual basis. It's just
Accrual
assuming.
basis is built on the going concern. Yes.
Oh, okay.
So only when you
it's
establish going concern, like you establish that this company has no issues with going concern, then you can apply accrual basis accounting.
okay.
It's a criteria.
Okay.
So that's why analysis is important. So usually when people analyze, they see,
Mm.
how much current liability this company
Mm.
has versus how much current assets they have, right?
Mm.
If the current liability is way, way higher than the current asset, it means that the company in the short term within this year does not have enough asset to pay off whatever, liability that's due within the year. And that puts them in a dangerous position,
Mm.
right? And in this sort of cases, if the company choose to, just go bust, right?
Mm-hmm.
Then cash basis will be used for the accounting.
Okay.
And there's different implications on the financial statement. The figures will be different. The only thing is I can't tell you what's the difference because we are not exactly trained in this. Only people
Okay.
who are doing liquidation, those people have specific training just to do this. Yeah, they can tell you what the difference is. But for us, we deal with normal businesses, right? So
Right.
we just do accrual basis and we learn that almost exclusively.
Okay.
So other than that, well, so far any questions? Anything you want to find out more about?
Mm. I guess it's the same every session. I won't know what I won't know until I come across it.
Okay. All right.
Yeah.
Yeah. Then other than that, well, anything else for the other parts?
Okay. Do you want me to read out
Yeah, sure. You can go ahead
the
with
exact
that.
definition?
It's probably the
Uh.
more technical definition.
No, that actually is pretty generalized. The model answer for going concern theory
Mm.
will be the business is assumed to continue its operation indefinitely. That's it.
Yeah. So
Yeah.
it's
So it's simply
it's
just to
essentially the
assume
same. Yeah.
it's
Okay.
yes, essentially what it covered. Yeah.
Right. Okay. All right. Then yeah. Other than that, we have come to the end. I
All
hope
right.
you get better.
Thanks
uh,
for having me.
yeah. Thank you for being such a
Bye.
great student.
Bye. Bye.
I'll see you around. Bye bye. Okay. Right. So just the final. Why did my? Oh no! Why is my alt tab not working? Okay. Uh. Right. So we've come to the end of the stream. It's a short one because I don't want to force him to continue with his current physical condition, right? So yeah, today let's just do a bit of summary, right? Since we have a bit of time. First of all, we looked at some traps that they could put in the question, right? The first one is the phrasing, right? They give you a sum, then they comma, which includes another sum, right? So this could be a hint as well to you that those two should be separated, right? But do not assume, okay? It could be a red herring. So read the question carefully before deciding whether or not to include, in this case, the 150 as part of the 20,650, right? The second trap is, after deducting 3% cash discount, in the second line. So what this means is, you know, the same thing that I said to my student, right? Do you divide it by 97% or do you multiply it by 103%? Because there is a difference in calculation, right? Dividing by 97% means that the 1455 is 97% of the 100%, right? And times 103% means that 1455 is 100%. You're taking it as the base, right? And you add 3% to it. So there's a difference, right? Um, Again, this is the markup and margin difference, right? Markup is the multiply by 103%. Margin is divide by 97%. So for those of you who still remember the lesson from before, this is another sort of example for it, right? Let me see if there are any questions that are popping up. I don't think so. It should be fine. Yeah. Okay. Um. But yeah. So that is the first thing, right? The second thing is we looked at how to do the debit credit for those, right? So motor vehicles, that's relatively straightforward. The reason why we take out the annual road tax is because the road tax doesn't exactly add any value to the car itself. It allows you to use the car, yes, but um, in the end, it doesn't stay with the car, right? Like when you sell the car, you can't just say, "Oh, I've paid 10 years of road tax. Can I get that money back, or at least a portion of it back?" Right? No, of course the car dealer wouldn't allow that, right? Because the road tax is used for is paid to allow you to use that car for that year. So that amount is it doesn't add to the car essentially, right? You still gotta pay the same amount next year. So, yeah, for this case, right, it's an expense because it's something that you need for it to function. It's like gas. If you don't have gas in your car, it doesn't run. Again, if you don't pay your road tax, you can't really drive it on the road without getting into trouble, right? So it's the same principle. And gas, you treat it as an expense, right? Because it's a must-have, right? But at the same time, because your car guzzles the gas and just release it as, actual gas, uh, it doesn't add any value to the car, right? You can't just say, "Oh, I've topped up 100 liters," when I sell it, unless I've not used any of the 100 liters. When I sell it, I'm not gonna say, uh, "Hey, can I get 20% of that money back?" Right? Yeah. So it's the same logic here. So that is why we do it like this, right? Is the treatment. And the second one is a bit more complicated. As I've said before, cash discount means after your customer owe you a certain amount of money as a reward for them for paying you earlier than expected, right? Usually within a few days, like 2 to 3 days, right? You give them a special discount. So in this case, it's $45. Don't mind my math from before. It's pretty. My brain is not really working that well today, unfortunately. But yeah, uh, you gotta recognize it as a different amount, right? Okay, so one thing about debit and credit is whatever you put on the debit side, the total must equal to the total amount of credits, right? What goes in must come out. Or you know, if you learn physics, matter cannot be created nor destroyed, right? So yeah, your trade receivables decreased by 1,500, right? It means that your cash and something else must add up to 1,500 as well. So that's why we said discount allowed, and discount allowed is an expense. Why? Because it's something that we absorbed, like we just take the loss, right? Take the L, to basically facilitate our business, right? We get the cash maybe 10 days earlier than what usually happens. So for example, instead of 15 days for the customer to pay you, they pay in 5. So yeah, you have extra 10 days of um basically let's see, like it's a first move advantage kind of, right? So you get your cash earlier, you could use that cash to do other business, other operations earlier, and basically makes you move a little faster than your competitors, right? So um that is why they would rather give up the $45 and essentially buy time, right? That $45 is paid for convenience, for speed, right? And that is that. And the second, or part B, is theory question, right? Essentially, well, I'm not sure if the answer is correct or not because I didn't confirm it, but business cash position essentially, by my understanding, right? Correct me if I'm wrong. Please do that. Uh, I'm also learning. It just means, to me, what is their cash inflow compared to their cash outflow for, that period, the month. I think this question is the month. Yeah, during December. So for the month of December, right? Suggest ways that business can improve their cash position. Essentially, it's asking you, how can you convince people to, increase your cash inflow uh or decrease your cash outflow, right? So for example, right, so this is oh, I didn't deal with the other side. So this is one side. Okay, I'm gonna have to let my student know about this, I guess. So this is one side, right? The other side is, oh dear, where did my other scroll wheel go? Oh, okay, there we go. Let me see if I can. Okay. Let me scroll this to the right a little bit. Okay, so the other side will actually be, how do you decrease your cash outflow, right? You ask for installments. For example, the motor vehicle, which is in the question, right? Some 20,000. You just ask the guy who sells you the motor vehicle, hey, can I pay this over like 3 months? It's more reasonable, right? Instead of asking you to immediately fork out a 20,000 bill, right? Of course, big companies can do it, but if you're just a small company just starting out, it's difficult, right, to just have 20,000 lying around. So you ask for installment. So that way you split your outflow across a few months. The only downside is you need to keep track, right? So if you have multiple installments running at the same time, that outflow actually adds up pretty quickly. So that's one place where you need to be careful in the real world, right? In the exam, it's exams. It's far less constraints and far less concerns that you need to worry about, right? Of course, the question could ask you what are the pros and cons of each, then you gotta list it out. But yeah, the easiest way to decrease your outflow for any one-time payment is to ask for an installment payment, right? Sure, they could add like maybe 1% a month, depending on how generous they are, right? They could increase it as well. What other ways to decrease your outflow? Well, you could you could always find cheaper alternatives. That's a very no-brain kind of answer, but it's always an option, right? That's usually why people ask for quotation first. Yes, is to really compare the price, compare the what they offer, right? It could work. But I'm not gonna write it here instead. I think this is enough for both sides, if I'm not wrong, right? The difference. Okay, we move on to part C, right? Difference between bookkeeping and accounting. Bookkeeping is essentially just a subset of accounting, right? You need to know how to do bookkeeping first before you can actually do accounting. If not, you are just how do I say? It's not that it doesn't work, right? People have done it because they can rely on software nowadays, right? But when things go wrong, and things will go wrong, right? In accounting, there'll always be things that go wrong. Uh, you need to have the knowledge to fix it. And how do you fix it? Well, bookkeeping, right? Once you know how to do it, once you know where it went wrong, you can reverse it and you put in the correct entry, right? And then we build on that foundation for accounting, where you add in analysis, you add in summary, communication. Essentially, you write it in a piece of paper to be presented to shareholders, presented to the general public, right? The government might also want to take a look at that. Yes. So yeah, accounting isn't just debit credit, right? It's built on it, yes, but the more fun stuff actually happens at higher level accounting. When you start to do forecasting, you do budgets, you can even do cost analysis, right? So for those of you who specialize in those sorts, yes, that is pretty fun if you like it. can consider it as a career actually. That's called management accounting, right? Um, the ones that we're learning now, the debit credit, is financial accounting. So we're dealing with the financial statements and all that. Management accounting is well, for management, right? Internally, you're helping the company become more efficient and all that stuff. To be honest, that is way more fun than financial accounting, in my opinion. But uh, I am not doing that right now, so maybe I'll look into it in the future, right? Right, enough yapping. Finally, we're going to going concern. It's essentially an assumption, right? We assume that businesses can operate for an indefinite amount of time, basically forever, right? This allows us to basically do our accounting estimates, right? To apportion whatever costs across the time that is incurred. Because if we cannot assume that the business can even continue for can even be open the next day, there's no point in uh really doing estimates, right? Because everything would just fall apart kind of at any moment. So it's best if we do a real uh how do I phrase this? It's like a real time analysis kind of thing, right? So for that is the cash and accrual basis accounting. I've went through it in a previous lesson and I've kind of recapped it here, so I'm not gonna continue speaking about that, right? Until the next time someone actually requests for a different explanation, that'll probably just be the explanation they'll stick with, right? So once again, we've come to the end of my stream, right? For me, it's a Friday evening slash night. So yeah, it's been a fun week for me. Yes. And hopefully your week hasn't been extremely terrible, right? If you're watching this VOD, uh, all the best. Sincerely, right? We all have our own troubles, and we're working hard for our own goals and stuff. But it's always okay to take a break, right? Which is what I'm doing right now. Doing things that I like, streaming, teaching, doing, indulging my own hobbies. So yeah, if you happen to chance across this video and make it to this point, yes, thank you very much for making it to the end, right? It has overrun by quite a lot. I yap too much. No. Right, okay. If not, that is really the end of the video and the stream, right? Thank you so much for watching, and I'll see you, I think, tomorrow, but we won't be doing education stuff. More fun things, more fun things. Right, see ya, take care.